Introduction. Ever wondered why you keep breaking your own trading rules, even when you know better? You've read the books, watched the videos, back-tested your strategy. But when real money's on the line, your hands sweat, your heart races, and suddenly, you're making decisions that aren't in the plan. You're not alone. Every trader, new or experienced, has faced this invisible opponent. It's not the market. It's not the algorithm. It's your own mind. This book isn't about candlestick patterns or indicators. It's about something much deeper and far more powerful. It's about mastering yourself before trying to master the market. Because the hard truth is, until you control your emotions will control your trades. In Mind versus Market, you'll learn what separates consistent traders from emotional ones. You'll discover how to quiet the noise in your head, build discipline like a pro, and finally feel in control, even during chaos. This isn't a book you just read. It's a mindset you practice, a new operating system for the trader you're becoming. Let's be honest, your strategy isn't broken. Your mental game is. Let's fix that. Chapter 1. Your brain is not a trader. What if I told you that your biggest trading losses didn't come from your system, the market, or your broker, but from a 3-pound lump of tissue inside your head? That's right. The brain that helps you survive in the real world is the same brain that sabotages you in the financial markets. Because here's the harsh truth. Your brain wasn't built for trading. It was built for survival. It was designed to help you run from lions, avoid starvation, and protect your tribe, not to manage risk, control emotions, or stick to a plan when red candles are flashing on your screen. Let's break this down. Thousands of years ago, your ancestors lived in a world of immediate danger. A rustle in the bushes meant a potential predator. A change in temperature could signal starvation. In this environment, the human brain developed what's called the fight-or-flight response, a survival mechanism designed to make instant decisions under stress. Fast forward to today, and that same wiring kicks in when a trade goes against you. Your heart races, your palms sweat, your breathing shortens, you feel panic. And in that moment, you do what your brain thinks is right. You react. You close the trade too early. You double down. You freeze. Even though you promised yourself you'd stick to the plan this time, you didn't. This isn't because you're dumb or disciplined. It's because you're human. Trading, unlike most professions, forces you to face uncertainty every single day. But your brain doesn't like uncertainty. It sees it as a threat. It craves control and certainty, and the market offers neither. Every candle, every tick, every unexpected move feels like a test of your survival instinct. Let's talk about fear and greed, the two emotions most traders blame for their losses. Fear kicks in when a trade is going against you. You might cut your winner early because you're afraid it'll reverse. Or worse, you hold on to a loser praying it'll come back because taking a loss feels like death to your ego. On the other side, greed whispers in your ear when a trade is green. You ignore your target. You think maybe it'll go further. Suddenly, you're holding too long. The trade reverses, profit disappears. Both fear and greed are ancient survival tools. Fear kept your ancestors alive. Greed, wanting more than you need, was useful when food was scarce. But in the market, these instincts will crush you. It gets worse. Let's talk about dopamine, the brain's feel-good chemical. You get a hit of dopamine when you win a trade. Your brain rewards you, says, yes, do that again. But dopamine doesn't care how you won. It just remembers the reward. That's why one lucky trade can create a bad habit. You chased price, you broke rules, but you made money. So your brain thinks, let's repeat that. Over time, you become addicted to being right, not being disciplined. Then there's loss aversion. This is a big one. Psychologists Daniel Kahneman and Amos Tversky discovered that people feel the pain of a loss twice as strong as the joy of a gain.
That means losing $100 hurts you more than gaining $100 makes you happy. In trading, this creates a dangerous mindset. You'll do almost anything to avoid taking a loss, even if that means turning a small loss into a big one. Ever average down on a losing trade just to get back to break even? That's loss aversion in action. Ever refuse to close a red trade because it's not a loss until you sell? Yep, that's your brain fighting against reality. Another cognitive trap is overconfidence. After a few wins, you start to think you've figured it out. You feel invincible. You take bigger positions. You skip analysis. You break your rules. And the market humbles you fast. This happens because your brain loves patterns, even if they're not real. If you win 3 trades in a row, your brain assumes a streak. But in trading, a few wins mean nothing if they weren't based on repeatable behavior. Let me tell you about Ryan, one of my early coaching clients. Ryan was a smart guy, college-educated, tech-savvy, and obsessed with charts. He spent months building a solid trading plan, back-tested it, paper-traded it. Everything was dialed in. But the moment he went live with real money, it all fell apart. He would enter too early, exit too late, move stops, chase entries. I asked him, "Why didn't you follow your plan?" His answer was, "I don't know, I just panicked." Sound familiar? That's the emotional brain, the limbic system taking over. The moment risk shows up, the prefrontal cortex, the rational brain, goes offline. You stop thinking clearly and start reacting instinctively. In short, your caveman brain grabs the wheel. So how do we fix this? First, you need to become aware. You can't change what you don't see. Most traders think their problem is technical. It's not. It's psychological. If your system works on paper but fails in real time, the issue is you, not the market. Start tracking your emotional state before, during, and after each trade. Were you anxious before entry? Did you hesitate? Did you get angry when it reversed? Did you feel regret? Build a journal not just for trades, but for thoughts and feelings. Over time, you'll notice patterns. You'll see that your biggest losses didn't come from bad trades, they came from bad states of mind. Next, you need to separate your identity from your outcome. This is hard but crucial. Most traders tie their self-worth to their P&L. They feel like a genius when they win and a failure when they lose. That's toxic. The market doesn't care who you are. It's not out to get you. It's just a reflection of probabilities. You need to adopt the mindset of a probability-based thinker. Think like a casino, not a gambler. A casino doesn't care if one guest wins big. It knows the edge plays out over time. That's how you need to think. Play your edge consistently. Let the math work. 1 trade means nothing. 10 trades mean little. 100 trades tell the truth. Another key shift is understanding the difference between reaction and response. Reacting is emotional. It's impulsive. It's your brain trying to protect you. Responding is intentional. It's controlled. It's your mind being in charge. To shift from reaction to response, you need space, a pause. That space is where growth happens. You can create this space through simple practices, like deep breathing before entering a trade, a trading checklist you follow every time, or even walking away from your screen after placing a trade. Create rituals that calm your nervous system. The goal isn't to eliminate emotion. That's impossible. The goal is to manage emotion, to feel fear but not act on it, to feel greed but not chase, to feel regret but learn, not spiral. One of the biggest turning points in my career came when I stopped trying to beat the market and started trying to understand myself. That's when my trading stopped being a roller coaster and started becoming a business. The best traders in the world aren't the ones with the flashiest setups or the fanciest tools. They're the ones who know how to stay calm when others lose their minds. They're not superhumans. They've just trained their brains for the battlefield. And that's what this book is here to help you do. So, before we dive into systems, strategies, or routines, I need you to accept one simple truth. Your brain is not your ally in trading until you train it to be. This chapter isn't meant to scare you. It's meant to free you. Once you realize that your struggles aren't because you're broken, but because you're human, you can let go of the shame. And when you let go of the shame, you create space to grow. The first step to winning in the market isn't more indicators. It's not a new strategy. It's not even capital. It's self-awareness. It's noticing that voice in your head before it hijacks your decisions. It's pausing before you click the button. It's journaling after each trade, not just what happened, but how you felt. Because the real edge isn't out there. It's in here. In the next chapter, we'll talk about emotions, why they're so powerful, how they disguise themselves, and how you can build emotional discipline that protects your capital and your confidence. But for now, I want you to remember this. Your brain is not a trader, but it can become one if you're willing to do the work.
Chapter 2. Emotions don't care about your strategy. You can't out-trade a mind you don't control. You've done your homework. You've got a well-tested strategy. You followed every trading rule in the book. So why, when it matters most, do you still mess it up? Because your emotions didn't get the memo. Let's get one thing straight. Trading isn't just a game of strategy. It's a war of emotions. And most traders lose, not because their strategy was bad, but because their state of mind was. Let me paint a picture for you. You wake up. You've got a plan. You've done your analysis. You know the setup. You wait patiently for your entry. You get in. The price goes slightly against you. Your heart rate picks up. You start second-guessing yourself. You stare at the candle like it personally insulted your family. You move your stop. The price drops harder. You freeze. You start praying. Stop loss hits. You're out. Now you're pissed. Next candle, boom, it reverses in the exact direction you predicted. But you're out. And now, you want revenge. You re-enter. You double your size. You break every rule you made this morning. This, right here, is how most traders lose money. Not on the chart, but in their head. And this is what this chapter is about. How to stop trading like a human and start trading like a professional. Let's talk about something no one likes to admit. Even the best strategies fail when emotions take control. You could have the world's most accurate indicator, a $5,000 trading course, and a rock-solid risk management plan. None of it will save you if you can't keep your cool when things don't go your way. Here's the brutal truth. Every trade is a test of your emotional discipline. Not your intelligence, not your technical skill, not even your experience. Just your ability to stay calm and stick to your plan. There are 3 silent killers that show up more often than any losing setup: revenge trading, FOMO, and hesitation. Let's start with revenge trading. This is when the market hurts your ego, and instead of stepping away, you take it personally. You chase after your losses. You feel like the market owes you. You size up on the next trade to win it back faster. And just like that, one small loss turns into a massive emotional meltdown. It's not about the trade anymore. It's about proving something. Here's what you need to know. The market doesn't care about your feelings. It's not attacking you. It's not punishing you. It's not trying to get even. It's just doing what it does. If you take it personally, you lose. Period. Then there's FOMO, fear of missing out. This one is sneaky. You're watching a trade run without you. You were waiting for a pullback, but it never came. Now it's flying,
and you feel like the whole world is making money except you. So what do? You jump in late. No setup, no plan, no edge, just vibes. And what happens? The moment you enter, the market reverses again. Now you're not just late, you're trapped. FOMO is dangerous because it disguises itself as intuition. But intuition in trading only works after you've done thousands of trades and built pattern recognition over time. Most of the time, what you call intuition is just anxiety in disguise. Finally, let's talk about hesitation, the quiet killer. It doesn't yell like revenge trading or buzz like FOMO. It whispers. It shows up when your setup is right in front of you, but you freeze. You hesitate. You wait for more confirmation. You overthink it. You watch it leave without you. This comes from fear. Fear of being wrong. Fear of losing money. Fear of looking stupid. But in trading, hesitation's expensive. Because good setups don't wait. And the longer you hesitate, the less confident you become in your own decisions. So how do you stop these emotional traps from wrecking your trades? You build emotional resilience. Think of your emotional control like a muscle. You can train it. You can strengthen it. And when the market throws you into the fire, you'll be ready. Not perfect, but prepared. Let's start with one of the most underrated tools in trading, mental stops. A mental stop isn't the number on your chart. It's a boundary in your mind. It's the moment where you recognize, I'm no longer trading my plan, I'm now trading my emotions. That's your cue to pause, reset, or step away. You might tell yourself, if I break 2 rules in a row, I'm done for the day. That's a mental stop. Or, if I feel the urge to revenge trade, I take a 15-minute walk. That's another. These are the small rules that protect you from yourself, not from the market, from you. One of the best ways to identify emotional patterns is through journaling. Not just writing what trades you took, but how you felt before, during, and after. Did you feel anxious before entry? Were you tempted to skip your stop? Did you size up emotionally? Were you trading because you were bored? When you track this honestly, you'll start seeing patterns that no chart can show you. You'll learn that your worst trades don't come from bad analysis. They come from bad headspace. Another tool? Breath control. Sounds simple, almost too simple, but hear me out. Your breathing is directly tied to your nervous system. Shallow, fast breathing activates your fight or flight response. Slow, deep breathing calms your brain down and returns control to your logical mind. Try this. Before every trade, take 1 deep breath in for 4 seconds, hold for 4, and breathe out for 4. Just 1 cycle. Do it every time. You'll be surprised how much clearer your thinking becomes. Next comes detachment techniques. One of the most important lessons I ever learned in trading was this: trade like a robot, reflect like a human. When you're in a trade, your job is execution, not analysis, not regret, not hope, just execution. You must detach from the outcome. Win or lose, it doesn't define you. Your self-worth is not tied to your P&L. This is hard, especially in a society where your value is measured by results. But in trading, that mindset is deadly. Instead, focus on process over outcome. You can do everything right and still lose a trade. That's normal. That's part of the game. The goal is not to win every time, it's to execute well every time. That's where consistency comes from. One mental trick I use: talk to yourself like a coach, not a critic. When you make a mistake, don't say, "I suck." Say, "Interesting. Why did I do that? What triggered me? How can I improve next time?" This creates a mindset of growth, not guilt, And when you stop beating yourself up, you create space to actually learn. Let's take a real-world example. I once worked with a trader named Anna. She had a great system, 50% win rate with 2-to-1 reward to risk, solid edge. But she was bleeding money every week. When we broke it down, here's what we found. She followed her system 60% of the time. The other 40%, she broke rules when emotions kicked in. One loss led to revenge trades, one missed setup triggered FOMO, one early stop-out led to hesitating the rest of the day. When we fixed her emotional discipline, not her strategy, everything changed. She started sticking to her rules, journaling her emotional state, doing breath work before every session, and logging out when mental stops were hit. Within 3 months, she turned her account around. Same system, same edge, different emotional control. And that's the lesson. You can't out-trade a mind you don't control. Your emotions are loud. Your strategy is quiet. The one you listen to will define your career. Choose wisely. In the next chapter, we'll go deeper into the idea of discipline, how to build it, protect it, and make it your strongest trading edge. But for now, remember this. Your emotions are loud. Your strategy is quiet. The one you listen to will define your career. Choose wisely.
Chapter 3. Discipline is your only edge. The real difference between amateurs and professionals. Let's get brutally honest. Most traders aren't losing because their strategies are bad. In fact, many losing traders have systems that should work. They have solid risk to reward, decent win rates, and clear entry and exit rules. And still, they lose money. Why? Because they don't follow their own rules. Because they lack discipline. And without discipline, no edge in the world will save you. This chapter is going to be uncomfortable for some, but it will also be one of the most important chapters you'll ever read about trading. Because discipline is the real edge. Not indicators, not signals, not AI-generated entry points. Just pure, boring, unsexy consistency and execution, especially when it's hardest to do. Let's start by killing a popular lie. You don't need more motivation. That's the trap. Motivation feels good. It's addictive. You watch a YouTube video, feel inspired, promise yourself you'll change. You buy a new course. You rewrite your rules. You clean your workspace. You feel like a new version of yourself. But 2 days later, you're back to doing the same things, skipping your stop, doubling down, breaking rules. Motivation is emotional. It's temporary. It comes and goes. And the market doesn't care if you feel like showing up. Discipline doesn't care how you feel. It shows up anyway. That's the difference. Let me give you a comparison that changed my life. Motivation is like a sugar high. Discipline is like protein. One gives you a rush. The other builds you up slowly and sustainably. Real traders don't rely on motivation. They rely on systems, routines, non-negotiables. They build a process that works whether they're feeling good or not, whether it's Monday or Friday, whether they just had a loss or a win. And guess what? That's the separation line between amateurs and professionals. Professionals don't wait to feel ready. They've already decided how they'll act before the emotions show up. There's a reason 90% of retail traders lose money even when they have access to strategies that could work. It's not about knowledge. It's about execution every single day. You see, trading is a strange business. Most businesses reward hard work. Trading doesn't. It only rewards good decision-making over time. You can work all night researching a setup and still lose money if you hesitate for 1 second. You can spend hours backtesting and still fail if you ignore your stop just once. In trading, one emotional decision can wipe out a week of progress. That's why discipline isn't optional. It's survival. Let me introduce you to a trader I once coached. His name was Josh. Josh had all the tools: fast computer, dual monitors, subscribed to 5 premium platforms. His analysis was solid. He had a 55% win rate with a 2-to-1 reward-to-risk ratio. On paper, he should be printing money. But he kept blowing up small accounts every few months. When we dug into it, the problem was obvious. He didn't respect his own rules. If he had 2 red trades, he'd take 1 more just to make it back. If he missed a setup, he'd jump in late out of frustration. If a trade was close to his stop, he'd move it just a little bit more. Every one of these tiny moments was a crack in his discipline, and cracks destroy structures. We rebuilt his entire routine, not his strategy, his behavior system. We added pre-market routines. We added a mandatory cooldown after 3 consecutive red trades. We built micro habits that protected his mental capital. Fast forward 6 months, same strategy, same market, but now Josh was profitable. What changed? His edge wasn't the setup. His edge became his behavior. This brings us to something most traders don't talk about: micro habits. These are small, repeatable behaviors that compound over time to build real consistency. Not just what you do in the trade, but before and after as well. Your morning routine, your journaling habit, your emotional check-ins, your risk review. Professional traders treat trading like an athlete treats their sport. They warm up, they prepare mentally, they review game tape, they treat it like a business. Ask any Navy SEAL and they'll tell you, discipline isn't born on the battlefield. It's built in the boring moments. Waking up early, making the bed, checking the gear, running drills, over and over. Because when pressure hits, you fall to the level of your training, not your goals. You want to know what a disciplined trader looks like? They show up at the same time every day, even when there's no setup. They sit through boredom without forcing a trade. They stick to their stop, even when it hurts. They size down after a losing streak. They log every trade, not just the wins. It's not glamorous, but it's powerful. And here's the beautiful part. Discipline is a skill. You're not born with it. You build it. Let's talk routines. Routines anchor you. They give your trading day structure. Without them, you're reactive. You trade based on how you feel. With them, you become proactive. You trade based on rules, logic, and process. Here's what a high-performance trading routine might look like. You wake up at the same time every day. You hydrate. You journal your emotional state before even looking at the market. You scan for setups, but only trade when criteria are met. You review trades midday, check your mental state, and step away when needed. After the session, you debrief. You note mistakes, not to punish yourself, but to improve. You celebrate sticking to rules, even on losing days. Because in trading, a losing day with discipline is a win in the long run. This is how you build what I call ritualized execution. It's the process of automating discipline into your trading, so you don't have to feel disciplined, you just follow your rituals. Think about top athletes. Serena Williams doesn't wait to feel inspired to practice. Kobe Bryant didn't rely on motivation to get to the gym at 4 a.m. They had rituals, disciplines, processes, and that's why they were consistent. You need to treat trading the same way. You don't need more YouTube videos. You need more personal accountability. You need rules that you respect, even when no one's watching. You need to stop thinking discipline means being perfect. It doesn't. Discipline means you recover faster. You recognize the slip and correct it sooner. You build momentum, not by being flawless, but by being self-aware and consistent. Let's not forget the psychological side. Discipline builds confidence. When you stick to your plan, you trust yourself. When you trust yourself, you make better decisions. Better decisions lead to better outcomes. And when you see results from sticking to your rules, your belief in yourself grows. Discipline becomes a loop, a compounding machine. The more you do it, the easier it becomes. Not because it's effortless, but because it's ingrained. One of my favorite things to tell my students is, you don't rise to your goals. You sink to your habits. So if your goal is to be a full-time trader, what habits are you building? Are you trading like a pro or like someone guessing with money? If someone audited your past 20 trades, would they see a consistent process or chaos? That's the hard question, and it's the one that separates weekend gamblers from real operators. You can make excuses, or you can build discipline, but not both. If you're serious about this, then you need to become obsessed with process. Process is what carries you through doubt, through drawdowns, through boredom. It's the glue that holds your edge together. And when you make discipline your edge, you become dangerous in the best way. Because most people will never do this work. They'll keep chasing new strategies. They'll blame the market. They'll quit after a few losses. But you'll keep showing up. You'll sharpen your mind. You'll stick to the rules. You'll learn from every mistake. You'll build unshakable consistency, not because you're special, but because you're disciplined. And that's the secret. The market will always be uncertain, but your behavior doesn't have to be. Discipline is your edge. Discipline is your identity. Discipline is the difference between trader and professional. In the next chapter, we're going to go even deeper into mindset mastery. Specifically, how to detach from outcomes, stop needing to be right, and truly trade like a probability-based thinker. But for now, here's what I want you to remember. Your system isn't the edge. You are the edge, and your edge is only as strong as your discipline. Now go build it. Chapter 4. Detach from the outcome. You're not here to be right. You're here to win. Let me start with a painful truth. If you're trying to be right on every trade, you're already losing. Not just money, but your mindset. And once your mindset slips, your account usually follows. The obsession with being right is one of the most dangerous traps in trading. Because deep down, it's not about logic, it's about ego. Your brain wants validation. It wants to feel smart, in control, and successful. So every time you take a trade, your identity quietly whispers, "This has to work." But here's the hard part to accept. Trading is a game of probabilities, not perfection. Even the best traders in the world, those managing billions, are wrong all the time. They don't win every trade. They don't try to. They win over time, not by being perfect, but by being consistent, by following their edge again and again, regardless of outcome. And that's exactly where most new traders fail. They confuse outcome with skill. They think a winning trade means they did something right, and a losing trade means they messed up. That's false. A perfect trade can still lose. A horrible trade can still win. Why? Because outcomes in the short term are random. Let's say you flip a coin 10 times. It's a 50-50 game, but you might still get 7 heads and 3 tails. Does that mean heads had an edge? No, it just means randomness played out. Now flip that coin 1,000 times, and the average will settle closer to 50-50. That's how trading works. A single trade means nothing. 5 trades? Still noise. But 100 trades, 200 trades, 500 trades, that's where skill shows up. That's where your edge either proves itself or fades. And that's why detaching from the outcome of one trade is so important, because it lets you focus on what actually matters: process.
When you're emotionally attached to every trade, every candle feels personal. You ride a roller coaster of hope and fear. You get euphoric on wins, devastated on losses. Your self-worth rises and falls with your P&L, and that is exhausting. It's also unsustainable. I've seen traders burn out not because they lost money, but because they couldn't handle the emotional weight of needing every trade to work. But when you detach from the outcome, you free yourself. You stop seeing a red trade as failure. You stop chasing green trades to feel good. You stop trying to control what you can't. Instead, you shift into a different gear, a higher level of thinking. This is called neutral thinking. Neutral thinking doesn't mean being emotionless. It means being balanced, objective, grounded in reality. It's what elite athletes use to stay locked in when the game is on the line. Let me explain. A negative thinker sees a loss and spirals. I suck at this. Why do I keep messing up? I'll never figure this out. A positive thinker tries to force optimism. It's fine, I've got this. I'm the best. Next one's a winner. A neutral thinker says, okay, that didn't work. What happened? What can I learn? What's next? It's not about sugarcoating or beating yourself up. It's about staying calm and focused on the next move. I remember coaching a trader named Alex. He had a bad habit. Anytime he took a loss, he'd shut down emotionally. He'd skip the next few setups, question his system, and fall into a loop of fear. His whole identity was tied to his win rate. If he lost, he felt like a loser. When we worked together, I challenged him to track something different. Not wins, not losses, but did he follow his plan? That became his new scoreboard. Suddenly, he wasn't chasing green trades. He was chasing execution. He started measuring success by consistency, not outcome. And guess what happened? His results improved, but more importantly, his mental health improved. He stopped riding the emotional roller coaster. He stopped overtrading. He stopped burning out. That's the power of detachment. You shift from being a results-driven trader to a process-driven professional. Here's a hard pill to swallow. The market doesn't care if you win. It doesn't reward effort. It doesn't hand out trophies for working hard. It only pays you for executing well over time. And you can only execute well when you stop reacting to every tick emotionally. When you let go of the need to be right, something magical happens. You become curious again. You start seeing trades as experiments. You make cleaner decisions. You don't panic when things go wrong. You observe, you adapt, you evolve. You become your own edge. Let's talk about mindful detachment. This isn't some vague Zen trader idea. It's a skill, and like any skill, it can be developed. It starts with awareness. Before every trade, check in with yourself. Ask, am I trading to follow my process or to prove something? After the trade, ask, did I follow my rules or did I let my emotions run the show? You're not judging yourself. You're just noticing. Over time, these micro check-ins create a buffer between you and the chaos of the market. I like to use what I call the 2-minute rule. Before placing any trade, I pause for 2 full minutes. I breathe. I review my checklist. I look at my emotional state. And only then do I act. That short pause has saved me from countless dumb decisions. Here's another tool. Pre-detach from your trade before you enter. What does that mean? It means accepting the risk, accepting that you might lose, that it's okay to lose, that it's just one trade out of 1,000. You decide before entering that your identity doesn't depend on the result. You define success as following your plan, not hitting a target. Once you do that, you're free. And when you're free, you trade better, you think clearer, you're less reactive, more strategic, more grounded. You also stop revenge trading. You stop jumping into make it back. You stop thinking the market owes you something because you've detached. You've accepted that outcomes will vary, that randomness is part of the game, that losses are tuition. The market isn't a slot machine. It's not a test of your intelligence. It's not a judgment of your worth. It's a chaotic, beautiful, ruthless mirror. It reflects your discipline, your patience, your emotional control. And when you stop needing it to reward you every time, you start to grow fast. I once heard a quote from a poker pro that stuck with me. The goal is not to win every hand. The goal is to play every hand well. That's trading. You're not here to win every trade. You're here to play the game with excellence, to execute with discipline, to stay calm when others panic, to be unshaken by noise. When you start thinking in probabilities, not outcomes, you become dangerous. You stop chasing certainty and start building confidence. Confidence in your process, in your ability to follow through, in your ability to think long-term. That's when trading becomes sustainable. So here's a challenge. For the next 30 trades, ignore the result. Don't track P&L. Don't focus on win rate. Only track one thing. Did I follow my plan? Did I size correctly? Did I follow my stop? Did I enter where I said I would? Make execution your new obsession. This flips the game, because now every trade becomes a win if you followed your process. Red days become lessons. Green days don't inflate your ego. You stay centered, you stay focused, you play the long game. And that's the difference between being a trader and becoming a professional. Remember, detachment isn't apathy, it's control. You still care about your trades. You still care about making money, but you don't let your identity get wrapped up in it. You don't let your worth swing with your equity curve. You stop saying, I need this trade to work. You start saying, this trade is part of my system. Win or lose, I'm growing. That's the mindset that builds longevity. And here's the final truth. When you detach from the outcome, you become immune to the market's mind games. You stop reacting. You start responding. You stop trying to chase the market. You let the market come to you. You become the calm one, the focused one, the one who doesn't flinch. And in a world full of noise, that kind of trader stands out. Not just for